The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And what's always fascinating about this medium is that you just never know what one has to go through to get this show on the road. And thanks to my wonderful engineer, Al, we were able to get everything set up, came running in from something I had to do, got here in time. And what's exciting about this is that this is a perfect time to be on air, because yesterday at this time what I was discussing is there was a chance that moment at about 10:30 or something like that, when Bernanke was talking about his talking about Fed talk, Fed speak, that it was a moment we'd look back at in some time, in a period of time, and say, wow, that was an inflection point. That was a very, very important moment. And what I'd say is, I believe that the market could pull back, but I don't want to say it's 1%, 5%, 15%, 20%. All I want to say is that this moment is a very important moment. Now, the things that I over the years, you build up kind of a market savvy, let's call it that. And my impression was, having the day before been at I'll call it a bond meeting, and my suspicion was that the people that had sat on the sidelines for so long and tried to live their retirement years or their whatever it was that they were doing that was reliant on interest rates, that was becoming more and more and more difficult. And yes, there is inflation, although it's not showing up as inflation per se. The living is inflation. I mean, everything, it's just about everything you do. Maybe it's not counted in the official inflation figures, but boy, everything is more expensive. So that inflection point, I believe, is going to be something that we look back at, and it's got not the price of the market, it is the emotion. And that's really what I was talking about. What I was saying is there was something within me that said, for the people that have been forced out of bonds and into the market, into riskier assets, it's right at a moment where the market is at a stage where it could go up a little more, but it also certain sectors need to have a digestive period. So, in summing it up, in my opening course, my daily service, it goes out to subscribers, very comprehensive look at all the markets and the stocks we're in. And I've been talking about this for a little while. I've been saying the attitude I am very pleased with at this particular point is to say I would like a mixed portfolio. I want to see if the cyclicals and the consumer cyclicals are going to be, and I put automobiles and stuff like that into consumer cyclicals. They are also cyclicals. But I wanted to see whether or not they hold up on any pullback here. Will there be a rotation? That's really the essence of this. Well, all the new first of all, on my way into this appointment that I had, I'm saying to myself, I got a feeling that markets don't have major tops when so many people either are looking for it or have got themselves beautifully set up on the short side. And when that happens, sometimes what we're looking at is a situation where there is, in fact, a pullback, but it becomes a kind of a rotational pullback. So that, to me, is very important. So looking here at TFNN, we've got great programs all the way through to today. To the end of the day, we've got Steve Rhodes kicked us off with 2 hours. I was only barely able to hear a little bit on my mobile while I was driving. And so thank you, Steve, for 2 great hours as always. Just he has some really terrific techniques that he imparts a great deal of knowledge. I will do my best here for this hour. And, of course, normally we would have Larry Pisavento, and I'm not sure who's filling in for Larry today. But then we've got Daryl Martin, just, a fabulous technician, another great technician, Dave White. Dave did all those charts for the art of the charts. That's what it's called, based on Tom O'Brien's work, as well as Larry Pisvento's work on the Gartleys and butterflies. And then we've got we've got Andy Hecht, and just a great addition to our team here at TFNN, talking about commodities. Boy, he comes up with stuff I never knew about. Just so interesting. I remember when Ed Young used to do that when Ed was here, and it's so nice to hear areas of the market that you just you feel kind of dumb that you didn't know these things. Just basic stuff. So it's really great. And then, of course, 4 o'clock till 6, Tom O'Brien, except 4 o'clock today. I'll be back. I'm going to be doing the show at 4 o'clock till 5. It's going to be my pleasure to be sitting in. Now, I wanted to do something else here, just while I'm thinking about it, and I've got time. A week from today, here in the Newton area, I'm going to be doing this. I'm going to be giving a free, and this is really very interesting because it's 3 free hours of a workshop. I'll be going through techniques. I'll be going through ChapmanWave techniques. I'm going to be discussing why I did not want to go back into the short position on the Dow. Any new shorts this morning. Why? Because my suspicion was that with the MACD, the fast-moving average of the MACD still so strong, that there could be some kind of a rebound. I didn't have the signals to say just yet, and I will talk in a few moments how we should be going down, but there's something that might happen first. So I'll talk about that. But let me just go to this. Thursday, May the 30th, right here where I live in Newton, Massachusetts, we're going to be doing that. There it is, free online. Free online trading. No. One phone. Where is it? There it is. Basil Live Radio broadcast. I'm going to be doing in Newton Highlands, and the only obligation you have is to please just check off on the next page. You'll go to the front page. It says, "Come see the Tiger Technicians Hour live." Go to the next page, and then it just says, just enter some of your info down there for the Tiger Technicians Hour live event. And the reason is I need that because I need to be able to tell the folks down at the venue that we're going to be at, 72 Columbus Street, Newton Highlands, Mass. They're just near 1 block away from the train station. If you want to come in by train, it's already starting to get a lot of people calling in to say they want to, signing up. So I'm looking forward to it. I'm really looking at, and talk about timing. The timing of this just couldn't be better. Why? Because we're going to be looking at bonds. We're going to be looking at utilities. We're going to be looking at the transportation index. We're going to be looking at the sectors that I think are vulnerable to a pullback and the sectors that are vulnerable to upside surprises. And that is really what you want to know. I'm going to also, I thought about it this morning. I decided I'm also going to talk a little bit about, for those people who are looking towards longer term, what should you do? What kind of strategies could you have? What could you implement, and how could you implement it? So it's almost like a private session I'm going to be giving based on my ChapmanWave methodology, and then 11 o'clock to 12, exactly this time in 1 week, I'll be doing a live Tiger Technicians Hour, and the audience, you will be the people that I ask the questions from. It's going to be, so exciting. I'm really looking forward to it. Let's get rid of this, and let's go straight to the market. The E-mini went to 1686.75 yesterday intraday, and leg E in the ChapmanWave is where you've got to be careful. D&E is where you've got to be careful that there could still be a pullback, and there was a pullback, and the S&P has gone from 1685.75 to today's low of 1632. That is a 50-point move. That should be equivalent of about 500 for the Dow. I don't think it is 500 for the Dow. But let's just go on to show the 120-minute chart, how beautiful this works. Look, peak E in the 120-minute chart. What do we look for in the ChapmanWave? A buy signal that goes to a buy mode that can take you to at least D. It can go to E, can go to F, but that's where you go look at the technicals to see what's happening. Failed, and where did it go? I showed my subscribers this morning. Every day, I always add this picture that you can see right here on Tiger TV, the daily chart of the E-minis, or whatever contract we're still on the June contract, and the 120-minute chart with the ChapmanWave methodology. I give the parameters. I give no trades. I just, if I was to add trades to this, it's like a whole new, this could be a package that I give just on trade. I can't do that. It's just that I do enough as it is, so I don't want to overdo it. Now, where did the E-mini stop? And this is something I'm going to spend a little time on at the workshop. I'm going to show the importance of some of these moving averages that you have nothing to do with until they come into focus. The 9-period moving average you're always looking at because it's just a 9-period look back, no matter what time frame your bars you're looking at. But the 200 right there, that kind of goldy color, I don't know what color it is. Oh, I know what it is. It's that kind of pinky. I'll figure out what it is. Anyway, 1633.74. What was the low today? 1632.75. Is that not great? 1686.75 down to the 200-period moving average, which has, in fact, become beautiful support. You closed, no, not you. The E-minis closed underneath 1631, and that says, uh-oh, you've got a whole new step to go, and they can take you down to the 625 to 623 area. Okay, let's get rid of that, and we're going to go straight to some stuff that I need to look at here. This is what I do for my subscribers every day. This is the 120-minute chart of the Dow, the Dow Diamonds. You see that? I drew this. This was coming in, and we had a left side, right side price time match, and it went to the 152 area. I said it was key support to hold. The Diamonds went to 150, 155, bounced very nicely. 153.14 will be very strong resistance. The other thing we looked at here is the 120-minute Dow chart, went to a peak E, pulls back, and there's the left side, right side price time match, went under 15,215, and now it's bounced up. Now let's go through a couple of things. The volatility index went to D in the 120-minute chart. You go to D in the 120-minute chart, it says be careful because for a long time now, peak D in the 120-minute chart has been a turning point. And lo and behold, the VIX went from 15.11 to where it is now 14.09. Isn't that incredible? Now look at this. The volatility index went to 1.81, and it is in an area that I consider for my ChapmanWave trend gauge that says be careful because within 1 to 2 days you could get a very nice reversal to the upside. Well, we've already got the reversal, and here's the trend line I've been talking about in the Dow and the S&P. The very simple trend line is this: 877-927-6648. We'll be back. We've got Jake from Fort Lauderdale, Florida, and I'll be back straight after these messages. Dow is down 22, S&P is up down 6.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Tecnicians. Now, what if I said to you early this morning that that Tokyo, well, Japan, the Nikkei, would be down, let's make it a mere 7%. And that London and all the others were down 2%. And that, in fact, our futures were down, S&P futures down 18 points, S&P, the Dow was down about 130 points in the futures. Gold was rising, and in fact, bonds weren't doing very much, but the dollar was actually pulling back. What would you say the Dow would be at 11:25 a.m. Eastern Time this morning? I'm not sure that you would say that the Dow would be down -9 and the S&P was down -4.9. Let me run the numbers, and this is what I'm talking about. You see, where else can people go? That's the issue. It's not that you if anybody doesn't say that it's different this time, I think they're wrong. It has been different this time because never in our history has the Fed done what they've done. So it is different this time. However, when you get to the point and you get into this to the market up at all-time highs, then you've got to be careful about saying, yeah, it's different this time in the sense that there's no relationship to what you're saying to what the market is doing, because the market in many areas is extremely overbought. And that's why I'm saying, and I've said it for a couple of weeks now, I said selectivity, and I've really tried my absolute best for my subscribers in my opening call to be as selective as possible, trying to find the areas and hold on as long as possible to their positions, because this is not your normal market. Look, the Dow is down 10 at 15,295. The S&P is down 7 at 1647. The comp index is only down 4 at 3458. Let's see what Apple's doing. Apple's up 3 at 445. You've got gold down. Gold is up $11 at 1378. Now, it was up much more, and I'm suspecting that that pattern that I'm looking at, I'll go to it in a moment, the H that goes to an M pattern, that's really what I'm looking at. It's no big shakes to the upside, but it really is no shakes to the downside. If you want to trade, you're looking at a shorter-term trade, which we are looking at in the gold market, for a shorter-term trade to the upside, percentage, not necessarily points. And you've got silver down 22 cents at 22.25. Platinum's down sharply at 14.52. High-grade copper's down 9 at 3.2. That's China's slowing down. We're seeing slowing down in parts of the world. There's no question about it. You've got crude oil down at $1.36 at 92.91, and you've got bonds down 5.30 seconds, and they did not go up 1.5 points, which they should have been. So let me just go through this very, very, very slowly. I want to look at sectors that have been on fire that are now timed out, as far as I'm concerned. I also want to look at sectors that have had fantastic gains and are rotating through the sector to consolidate, but still have tremendous strength. And I'll look at one of those in a moment. But I also wanted to show the dollar just briefly here. See, the dollar's in leg E, but the MACD is still very strong. The stochastic's at 85%. You've got that U-shaped pattern, left side, right side, perfect to the exact week in the weekly chart and the cup formation. You've also got the monthly chart now in leg, I'm going to call it leg E. It could actually have started in new buy mode, and it could be in B, but I'm just going to call it E because there's no harm in calling it E. We're not doing anything right now because there's no signal yet that it's pulling back significantly. It's just a digestive day. So you're looking at this picture, and it's saying, aha, the dollar is attempting to break out, even though the Fed, I don't know if they're still doing it, but they certainly were for a number of years, was trying to knock it down, knock, like whack-a-mole. And on the upside, you've got bonds, and they were propped up. Now there's a little weakness. Now we can start to see, do I have time to do it? I'm just going to get rid of this chart now. I'm going to set it up, and then I'm going to go to our first caller's question because he has a sore throat, and he says, here's the question, and I have to hop off the line. So let me close this workspace. Close, yes to all. I'm going to add something else here because it's important in terms of what we're looking at. If we're looking at the home builders, and what do I have? Toll Brothers. TOL is the symbol. And Toll is right at this particular point, had a great earnings, spiked up 2 days ago, and, spiked up yesterday to a high of 39.25, had a low of 13.16 back in July of last year. Fabulous move up, and now it's digesting that gain, and I'm going to talk about it as soon as we get back. Basil Chapman, Tiger Tecnicians Hour, 877-927-6648. Dow's down 26, and the S&P's down 7. I'll be right back.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of tfnn.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. This is the Tiger Tecnicians Hour. Dow's down 18. S&P's down 6. Not all over, but it's just fascinating that there are still buyers out there. We are looking for Jake. Jake couldn't hold on the line, but Jake wanted to look at Toll Brothers, and I'm looking at Toll right now. There we go. 1, 2, 3, 2. Oh, now. Got it. So Toll is trading at 37.74, up 67 cents. Made a high yesterday of 39.25. I'd like to just type that in, 39.25. Now, this is fascinating to me because why? I've got a peak G or a brand new peak A being formed. Now, G is very, very negative. A is very, very positive. You know what? I don't care. I don't have to make a decision. First of all, I'm not in the stock. I would have liked to have been in the stock. I'm not in the stock. All I'm looking to see is what's going on. What are the chart patterns? Well, look at this. Just to make it real easy, if I go I grab it, and these are the things I'm going to do. I'm going to show in my workshop coming a week from Thursday. I'm going to show how you can use 2 lines. Just grab 2 lines and turn them into channels, or the inside check is the ChapmanWave technique that I use, where it delineates on the upside or the downside, a certain narrow parameter where the price is always repelled or propelled. Now look at this. I've turned this into an oval pattern. Now some chart packages do not have ovals. You can't get them easy. You make them up by two semicircles, things like that. Doesn't matter. You can even make it a rectangle as long as your eye says, hey, that should be an oval. What's important is that it's forming a consolidation phase. And my suspicion is that if Toll Brothers is able to see enough residual internal strength and the MACD is still good, the stochastic is not good, only if it can get into the wick about halfway or more, I would say into the 38.36, I'd even say 38.42 area, on any push to the upside in the next 2 days, that would say, great, now you can retest the high, and then and if it goes to 39.26, I have no choice but to call that leg B, and it's going to be very bullish for Toll Brothers over the coming 2 weeks. If, in fact, it fails, it's going to be what I call the right arm extension, where one of the technicals is moving to the upside. That's the MACD. It's almost always the MACD, and the stochastic is still failing. And that says, hey, be careful, because the MACD could start to make an M pattern and become weak if the fast-moving average goes under the slow-moving average, and then you've got to watch the low of yesterday, 34.97. Sounds like far away, but in this market, 3 points, 10% on any stock is not really such a big deal. So let's do this. In looking at it, I don't know whether you're long or short, Jake. I'm going to do it both ways. If you're long with a core position, I would say that on any rally, I would take just a little bit off. It's one of the great stocks and one of the great sectors right now. The monthly chart is at peak B. It should still go. Oops, let me get rid of that because I think it went a little higher. Yes, this is leg C. Oh, very interesting. Same as Lennar, I think. Very quick A to B to C. That's very positive, but it says be careful because if you make a very quick D in the monthly chart, that quick meaning, of course, in the number of bars it takes to make a trough and then a peak and then a new leg up, then you're looking at something that says, okay, now I'm ready for quite a bit of a pullback. But so far it's looking very good. All I'm suggesting is in your call position, it's getting a little tired based on my weekly chart, and I'm suspecting that there is a very good chance that the home builders over the coming 3 to 6 weeks are going to see a pullback that's going to be a little surprising, more in time than in price, but it's going to be a surprise because a lot of people think this is just the very best sector, and it might be, but on the chart formation I'm looking at, let me go to HGX, which is HGX. Now, as far as shorting is concerned, let me just look at the Philadelphia Housing Sector Index. It made a peak B. We always expect a peak D in the ChapmanWave methodology before a sharp pullback is likely. Well, lo and behold, what does it do? It goes to a peak D. I have to actually put a down arrow here because the MACD is down, stochastic's down. It can go higher. I'm just saying my methodology says it goes from sell signal to sell mode when the MACD crosses negative and the stochastic crosses negative. It doesn't mean to say you can't have another rally. It just says be real careful here because that's the signal. And the weekly chart has made leg E. That's saying to me as well, be a little careful in the home builders. They're doing fabulously. I just think they need a little time. That's all. It's not a big deal. How can I put it? They've had spectacular run. Look at this. This is a move in the Philadelphia housing sector from 73 to the high just 2 days ago of 210. If you don't tell me that a 300% or 290% increase doesn't deserve some kind of a breather, then I don't know what. This is one of them. Okay, so I'm saying to you, I don't think it's a short because all the surprises in the home builders will have these sudden pops to the upside, even if it comes down. I would say that if you're long, I would take a little bit off and I'd designate to put back that money into Toll if it ever breaks underneath 35.50 to 34.60, maybe 33.90, somewhere in that area, and give it a little bit. Don't let it make a V-shaped bottom. If it just comes down, starts to build a base there, I'd put that money back. And what are you doing? You're putting money back over 10% lower That's money that you've got in your hand, and if it goes back there, you've actually made 20%. That's the way I would look at it. But only a small position. Keep your core. I hope, Jake, that helps you out. Now, I had a question to Dan from Zip. Zip wants to know about AZO. Well, AZO made a spike to the upside. You see, chart patterns repeat. It doesn't matter what sectors or where you are. Once there's a certain pattern that comes about, I don't know what it is, they seem to repeat in the I'm going to say this particular point, I'm looking at daily charts, but it doesn't really matter, but they tend to formulate in the same way. And in this particular instance, that sudden spike to the upside, I don't know how many charts I could show you right now that have exactly that same kind of spike to the upside and the pullback. And what it's saying is, this, in fact, looks more like one of those triangle patterns that it's very rare to have them. It made the falling axe, ChapmanWave falling axe, break out 1-to-1. It almost did the 1-to-1. No, it did. It went over the 1-to-1. That's fabulous. And that says if it pulls back, that trend line that was the breakout trend line, I'm looking at AZO AutoZone trading at 419.39 up $1.67. That says that, in fact, that trend line is very important. And the 9-period exponential moving average. The MACD is deflecting lower. The stochastic's lower. My suspicion is that AZO, and I've got this on my list as a potential short at some particular point. I'd like to get back into the short side. We've had kind of almost a break even. We've had about the same number of point gains as losses, so maybe we're down a point. No, actually we're even. +1, +9, -8, and minus 2.40 is our total from going back into early April. So we're kind of neutral on the stock. And I'm looking at it right now as a stock that has a chance to retest the low of 401.93. I would put it this way. 408 is really important. If at any point it takes that 408, the slide down to that 402 to 400 area, that's going to be really important. Why? Because AutoZone has been the pickup for all the auto and truck, those long-lived vehicles that you keep repairing and repairing and repairing. That's what AutoZone does. They got the parts for these things. Well, we've had a huge improvement in General Motors, Ford, Chrysler, domestic car companies, and my suspicion is that more people are buying and less people are starting to do the spare part business. So that says it might be gradual, but my suspicion is that this leg D in the weekly chart is going to turn into a peak D and is going to consolidate, and I'm going to be watching it closely because the monthly chart has a potential peak F rather than a, I don't think that's an A, but a potential peak F if at any point AutoZone, AZO, cracks and breaks under 380. Sounds like, whoa, 380, talking about a stock that's 419 in this market. Anything can happen. So that's what I wanted to tell you there. We've got Lou in Nashua. Hi, Lou. How are you?
Hello?
Hi, Lou.
Yeah, hi. Fine, thank you. How are you?
Good, thank you.
Good. I was wondering if you could look at the 10-year bond and see if it's a short.
Okay. So if you don't mind, what I'm just going to do right now, I wanted to show this earlier on, and I prepared for it. I know you'd be calling, but it's perfect that you called. I have, in fact, for my subscribers, I show something that I show every week. It's called the triple yield bond chart. And it's a weekly chart. And what it shows is the TYX, which is in white right there, the 30-year T-bond yield, the TNX, which is the 10-year T-note yield, and that's in yellow, this goldy yellow color. And the cyan light blue is the T-note yield FVX. And basically what I'm going to do for you is I'm going to do all three together because they are moving kind of in sync. There's a little discrepancy, and I'm going to talk about that right now. Is there a position that you have on the 10-year? You have, in fact, a 10-year note?
I don't have anything yet.
Okay. So how would you trade it? Would you trade the notes? If you'd be working with the yield, what would you be looking to do?
Get a put.
Okay, so you'd be
on the futures, yeah.
You'd be getting a put on the. Do you have a symbol for the
No, for the 10-year bond? No, I don't.
10-year bond. Anybody in the den, give me the 10-year bond. I used to know it. I just, off the top of my head, I know the yields, and I know the yields. I look at the yields all the time. You know, we're going to look at the yield because whatever the yield does, it's the inverse of the bond fund. Someone's going to help me. I know in a few minutes. But in the meantime, you see that in the pattern that goes from 2006, there was a high back in the week of the 15th of June 2007, where there was a cluster formation where the 30-year Treasury yield, the 10-year and the 5-year all came together, and the high was 54.08. After that, it plummeted down to 25. Let me just double check what it was. Why did I put? Yeah, 25.19 in the 30-year, and all of them came down. It was the week 11.85 in the 5-year. That was in December of 2008. Now, what happened was they had a rally, and these are the yields, and the yields go inversely to the price of bonds. Now, look what happened. It ran up in the ChapmanWave to a peak E. All of them went to peak E, pulled back, made a cup formation, had another buy mode that went to peak E at 48.43, then 48.58, pulled back, had another rally to peak E at 47.89, pulled back, and now they've all troughed out, and that trough was in the week of 27th of July 2012, and the 13.94 was the 10-year yield. And then what did they do? They had a rally to peak E in the 30-year at 32.84, and 20.86 in the 10-year, and the 5-year had a high of 9.21. They pulled back, and now they've started another rally. Now, this is the one that's going to be absolutely key. It's really important. Now, I have someone in the den who's great at just giving me information here. So I'm going to go IEF. I just want to see if this corresponds. This is the iShares Lehman 7 to 10-year Treasury bond fund. Hey, this is probably what you'd be wanting to look at. So, Lou, this is what I'm looking at here. I'm going to take one moment and see what's the time. Oh, I haven't got all that much time. I'm going to do a quick ChapmanWave notation, and I have to do it with one hand. Give me a second. Here we go. It goes peak A, B. I want to do this too quickly and make a mistake. So B, and B goes to C. I have to double check now that I haven't missed anything. So that's 107.11, 107.12. That's exactly what I wanted to look at. 12, and it goes to 12. That's going to be CD. Great. I've got this. So now we go C, peak D. That's what you want in the ChapmanWave. Go to D. You go A, B, C, and lo and behold, we get another D. So now we're pulling back, and we've got trough A, B. I don't think that's a trough. That's not a trough. The 108, 107. So this is we're in leg C to the downside. Ha! Now, I'm so pleased I asked about this and that you called in about this. So the daily chart is saying I'm getting close in the iShares. IEF is the symbol, trading at 106.27. It's unchanged right now. I wonder if this is daily. Yep, that's today. I'm getting close to tremendous support, which has been supported. That's the area between 105.56 and 105.57, the previous major two lows. So now what I'm looking at is where would the support be? Well, the MACD is not good. The stochastic is acting okay. There is a slightly positive divergence. If the IEF rallies, then the yield will come down. So I'm going to take a moment here during the break. Can you hold on, Lou?
Sure.
Okay, let me take a moment, and I'm going to do a little bit more work. I want to be very thorough about this. I don't want to give you incorrect information. And I'll be back looking at the IEF, which is the Lehman 7 to 10-year Treasury bond fund, and the Dow's down 9, S&P's down 6. Basil Chapman will be right back. The Tiger Tecnicians Hour for the last segment.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share. Over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We are back. Last segment, we got Lou in Nashville. The news question was about the 10-year bonds, and then, thank goodness, we know we've got a wonderful medium here, right here. We've got Tiger Dan, and I just asked the question and I got the answer. IEF is responding and corresponds to the iShares Lehman 7 to 10-year Treasury bond fund, and it's given me a great deal of information I was able to do in that little brief time I had. The long-term monthly in the ChapmanWave went to, from the low, doji low of June of 2006, went to a peak F top in December of 2008, pulls back and goes to another peak F. I love the way patterns repeat, as in July of 2012, but now it's making a high-level consolidation. But the technicals in the monthly chart are suggesting the tide is changing and it's going down. When you've got the Fed in your side, that's one thing. When the Fed says, and I spoke about this, I thought it was a great report this morning. I said there was a pinprick yesterday, and it's just a subtle thing. It's just a pinprick, but the air has started to come out. nothing much you can do because it's just a tiny little leak, and that's basically what we're looking at. And the weekly says peak D, the quickest peak D in the weekly chart. It doesn't say it's going to break down, but it does say be careful because 106.21 could very easily break underneath the 105 support, and that concurs with what I'm looking at in the daily. So now it's a little, I don't know, I don't want to say it's too late because you've got a point, but to play the put side for a point, that's going to be tough. What I would be looking at is if there was any rally in the IEF, which you'd be able to follow on your chart just very easily, towards, it's at 106.22. If they're in the next couple of days or weeks even, if it can pop up to the 106.80 to the 107.30 area, that's the part, that's where I would start to consider a longer-term put. Or you could start a nibble on a longer-term put going out to July or something like that. But if you ask me about where the chart is going, it looks like it wants to make a left side, right side price time match to test the 105, 105.50 area. And that could come as soon as maybe next week. So I don't know how that helps you because you really want to be looking longer term, correct?
Right.
So the longer term says that the Fed is still there, and they're going to still keep propping it up. So I would tend to think that in the 105s, you're going to get a rally in the bond. And then you're going to start to come back again. And it's just making lower highs and lower lows. But over a longer period, I don't see, I mean, even yesterday's move down to today is not the worst pattern I've seen, considering what's happened. So I'm going to have to think about it. Let me think about it, and maybe tomorrow during the show I'll talk about it a little bit more, because I'll do a little bit more on the bonds, the 30-year as well, if you don't mind.
Right.
But what I'm saying right now, if you're going to look at the put side, a chunk of the move has been done. I wouldn't be surprised if there's a bounce that gives you a better price for the put. But I do have a target of 105. If 105s break, then the gap down the 104 area will be next, and I think that's where we are going. But I would prefer, if you're looking at an option, to be looking at a bounce first, so you can get a decent. You don't lose premium over a period of time. Hope that helps you.
Yes, it does very much. Thank you.
Thank you so much for calling, Lou. Always like to hear from you. So, okay, folks, we've got just a moment here. Let me just give you my synopsis of what I'm looking at here. INDU, and I'll do more of this at 4 o'clock when I do Tom's show. But I do want to mention one more time before we break. You've got great shows coming up all day today, but one thing that I would like is Thursday week, I'll be doing this live here in Newton, Mass. Go to the front page of TFN, check it out, and don't forget you've got Tiger dollars. You can use Tiger dollars for all sorts of things here at TFNN, and I have my opening call. I'm very happy with what we've done and our results we've had for quite a while now. So I'd love if you check out my opening call and use your Tiger dollars. So here's the down. The day's young. What I'd be looking at is that if there's a close of minus 80 or more, that says we're still going down further. My suspicion is that we're going to mess around here and then have a pop-up to the 15,400 area in the Dow. That's where it will become more vulnerable to the downside. Thanks for being here. I'll be back at 4 o'clock